All right, guys, this is how I lost $893 today day trading NASDAQ. So this is the trade right here. We're going to go ahead and do just a quick recap, a complete breakdown of why I took this trade, and we'll just dive right into it. So today is Wednesday, the 11th, and this is February 11th, 2026. So this morning, an hour before market open, we had non-farm payroll. We had all these red news folders, and so I wanted to obviously see what those did to the market. And if we come back here, let's go to the bar replay and just kind of wind things back a little bit. So this was right before the news came out, and let's go ahead and just go through it a little bit. And it was extremely bullish, as we can see. And a couple things about this is when we got up to about right here, we can see that it swept all of this liquidity from yesterday. It swept London, Asian, and previous day highs. So if we go to a higher time frame, we can see here that it's a little here. There we go. We went straight up. We took out this high, and this is something that I wanted to see, right? I like liquidity sweeps, and I was hoping to maybe catch this as a buy side liquidity sweep, come back to a smaller time frame, and it looked good for shorts. But obviously, I had to wait till market open, so I had to wait a little while. Fast forward a few minutes, market starts to go down, and this is where I hopped onto the charts. It was 7:30 yesterday. I didn't do a good job at getting onto the charts at 7:30 because I was at the gym, but today I was on the charts at 7:30. And a couple things. So if we go to the 15-minute, there is this big 15-minute bullish gap. And in a way, in a sense, this is kind of a very strong one because this is also a first presented 15-minute gap. Before news came out, we also swept these lows, these previous New York PM lows in London session, and we started going up. And we were still kind of delivering out of this 4 hour fair value gap. So I thought maybe we would want to go and tag these highs from days ago. And so I thought maybe instead of taking a short, maybe we can wait for the market, the price to come into this 15-minute gap, and we can catch a long just like that. That did not end up happening because I waited, and this is something that I feel like I did good with today was I was patient and I waited because right here I could see both shorts and longs setups being validated. And that's when in the past I've found myself just basically guessing, okay, well, I could see both happening, a short or a long, so I'm just going to take a short and hope it works. And I'll just do a 1-to-2 risk to reward ratio, and that will kind of, you know, cut the losses if I do lose or if I win, or you get the idea. So today I was a lot more patient than I have been in the past, and I told myself, okay, well, let's see what it does in this gap. If it uses it, respects it, and it goes up, then we'll start to look for longs. If it invalidates it, then I might even be able to try and take a short with all of this LR, low resistance liquidity, and possibly target these lows down here as a short. But that's only if it invalidates this 15-minute, right? So what ended up happening was, let's fast forward just a little bit. We did end up selling off a little bit more, and we did end up inversing this gap. However, I didn't want to just necessarily hop in right now because like the stop loss would have been way too big. I like to use this inverse. This is now an inverse, right? I would have preferred to have a much smaller stop loss, like 30 or 40 points, something like this. So when it got all the way down to here, I told myself the only reason I'll still take it short is if we come back into this inverse fair value gap and show a good selling off sign towards these lows, right? And that sort of happened. Not really, it wasn't really the prettiest. Let's go to the 1 minute time frame and show you what it kind of looked like. Fast forward a little bit. We didn't really go back and tag this IFVG, this 15-minute IFVG, right? It's also a 30-minute IFVG if we just zoom out. We had this big 30-minute, but I was mainly focused on that first presented 15-minute gap. So I was patient. Market just dumped today after NFP came out and all those red news folder events. I was very patient and I told myself, okay, let's, we react to the market. We don't pray or we don't try to predict it. So what happened was, well, maybe we can look for longs after this liquidity sweep on the downside, right? This sell side liquidity sweep. Same thing happened on ES at the same time. It came down and it swept these lows. Let me go to a different time frame so it looks a little bit better, right? Same thing happened. And market just kept going down. And so I told myself, all right, I don't want to necessarily trade against the trend. I would rather trade with the trend. So I zoomed out to a higher time frame and I marked out these lows right here. I'll go ahead and just use this tool. There we go. I know it's not exactly on the spot, but you get the idea. So I marked out these lows. I'm like, okay, if we want to continue to go down, that's probably our next target. So as we were going down, what I chose to do was I chose to mark out all the high time frame gaps, the bearish gaps, so that we could maybe get a continuation model strategy set up. And if you guys don't know what that is, basically a continuation model is just trading in continuation with a trend, whether it's bearish or bullish. And what I would have liked to see happen in this continuation was a retest into the 15-minute fair value gap that I just marked out, and a continuation down to these next lows that I told you about, these ones right here. So to me, I've taken a lot of those trades. Most of them usually work. I feel like it's a pretty good trade setup. I like to take it. I usually wait for a higher time frame, like a 15-minute or even a 30-minute fair value gap like this to get tapped back into, a little reversal, and then I continue the trade. And so anyways, if we zoom in, we can see that we did end up going up into this 15-minute right here and tapping into it right here. And we started going down. And this is where I entered my trade. So let me go ahead and just get rid of that. All I did was zoom into the 1 minute and I marked out this one little bullish gap, and we inversed it to the downside after having tagged this 15-minute fair value gap. And I was like, perfect, this is a great continuation model. I will either move to break even at these lows or take half of my contracts out here and move the rest, or take the rest of them out down here. However, that's like a pretty high risk to reward ratio. That's almost a 1 to 4.5. And that's a little bit too greedy, I think. So I probably would have just taken all my profits out here at these lows. And that was the trade setup, right? It looks good with my explanation of how I took it. I feel like I was very patient. I waited for evidence that it wanted to go down, and that was that little small IFVG, this little inverse fair value gap right here. That's just, the market telling us that it wants to go down. And I entered the trade, give it one candle, and I got stopped out right there. And at that point, I was like, you know what? I'm not even mad because I followed my rules. Today, I was very patient. Today, I also did something that I don't do all the time. And when the market is in a position where, like I said earlier, it could go up or down, and both setups look pretty juicy and they look vulnerable to take, I just don't trade those anymore because I've learned from too many mistakes that it just doesn't work. That is basically gambling. And you don't want to just guess where the market's going. You want to have clear evidence where you know it's going. So this is one of those trades where I'm glad that I took it. I followed my rules. I was very patient. And I think I did one mini on NASDAQ, and I'm just trading evals right now. I had 2 Apex evals, and I think I only have like $500 of drawdown left on those. But I'm not worried about it. I am trying to be a little bit more aggressive with evals to just quickly get out of the eval stage and into the funded stage. And one thing I learned the other day about being aggressive with evals, and this was a huge lesson for me, hopefully it helps you guys too, is being aggressive with evals does not mean taking more trades, and it also does not mean looking for decent trade setups to take. It just means, the only thing it means is risking more money. That's it. And so I would consider this an A setup, an A grade setup. I followed all my rules. I had, a little draw on liquidity down here, an external draw on liquidity, internal, all this stuff. And all it means is you just risk more. So I risked about $900 on this and I got stopped out. And I was like, okay, you know what? That's fine. It's a loss is a loss, and let's not get greedy. Let's not try and win it back or anything. Because I know that when I take more than one trade a day, I tend to start FOMO trading, revenge trading, and sometimes I even take two, three, four, five trades a day after that. And the more trades I end up taking after one loss, it makes it even easier for me to want to take more trades. So I'm just trying my best to limit myself to one trade a day right now. The process is super slow, but there's nobody rushing me. It's just me against myself. So if I can't set my own rules and follow them, then it's going to be difficult. But you guys get the idea. This is the trade setup, and this, I guess, I took this like what, 2 hours ago, so I haven't even really looked at the market since. I think we've just kind of slowly been kind of playing around in this area. So I don't even really care to look at the PM session. It's going to start in about 30 minutes, but I don't really care about the PM session just because I don't want to get greedy, and I don't want to try and feel like I'm revenge trading because I know I can't really handle more than one trade a day. So I got to stick to my rules. Sticking to your rules is the most important thing. So in my opinion, this I wouldn't necessarily consider this an A plus setup, but I definitely would say it's an A. I know there's a slight difference between an A and an A plus, and some of you might be asking, well, why didn't you wait for an A plus setup? And it's because it's an eval. It's because I'm just trying to get out of the eval stage, and I feel like this is one of those trades where I ask myself, am I going to be mad if I take this? And I told myself, no, I feel like this is a good setup. We've been selling off all day, and sometimes it happens. Sometimes you take a loss, but it's how you respond to those losses, how you react, and what you can learn from it. So, the things that I did good today, I was patient. I was disciplined in the beginning. I waited like, what, an hour and 30 minutes, just about an hour and 20 minutes before I even took a trade. And it's hard to wait when you see the market going down like crazy like this. But I feel like I did a great job at being patient and waiting for a good setup. I feel like I sized accordingly. It was quite a bit, but I'm fine with it. And things that I can do better, just keep learning from my losses. And yeah, so with that being said, feel good about today, and we'll see you guys in the next one.